This is HawkPodcast number 11. And actually, while I'm thinking about 11, there's a lot of 11 famous 11s. The most famous 11. See, Stranger Things. I know there's hey, hold on. I know there's a lot of Stranger Things fans out there. We can edit this if we need to. But I'm not one of them. We are here with podcast number 11, Hawk Podcast 11, and we are talking about the halfway point of the data center industry. It is the middle of 2019, and so I'm really excited about this because we're going to cover some of the different trends that are taking place today in the first half of the year, some of the things that we've seen and that we're seeing right now. And then we're also going to go market by market. I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 markets on podcast number 11, bro. Check that out. That we're going to go through and give a brief overview on each one and just highlight some of the things that are happening because you'll see some similarities within these different areas where data center growth and the absorption is happening, but you'll also see some key differences that highlight some of the trends that we'll talk about. So, again, halfway point in the year. We just hit the baseball all-star break, so that's quite exciting. But that's always kind of midpoint, kind of the dog days of summer a little bit. So there's a lot of halves going on. I'm this is kind of sad, but I'm almost 40. That's not sad, but what's sad is that I have kind of considered this a halfway point of my life, I guess. So that means I got about 40 more years, I guess. So anyway, we are talking about trends that are taking place right now in the data center market. And so the first thing I wanted to point out is, for sure in the second quarter of 2019, we definitely saw more market demand and absorption take place than it happened in the first quarter. So that traditionally, or at least what we've seen over the last couple of years, is the first and fourth quarters from a data center absorption standpoint traditionally are a little softer than the middle of the year. And so anyway, I think that's an encouraging sign. It kind of sticks to what we've seen over the last 3 years or so related to absorption. But, for the most part, I think it's a really encouraging sign for the market. One of the questions that we get asked a lot is where are companies looking to place, enterprise size data center deployments or large hyperscale data center deployments. And so that, and this is another trend. I mean, Northern Virginia, Northern California, Phoenix, Hillsboro, those markets, Chicago and Dallas to an extent, but those are all being eyed right now by large data center users. And certainly that will continue. Montreal is another market that you've seen some larger growth in, which we'll talk about here in a minute. There is another trend that we've seen for sure in the first, strong, bro. For sure in the first 6 months of the year has been, the larger hyperscale data center users operating a dual strategy related to how they're buying and owning their actual land to build data center facilities on and operate, and then leasing large amounts of infrastructure from data center operators. And this is a fascinating study when you look at how that's changed over the last 5 years. And if you listen back on our previous podcasts or our previous discussions with industry leaders, you definitely can see how that has changed and why that has changed the way it has. But that's still happening today. I mean, it's very clear that there is value that the larger data center users place value in utilizing the supply chain of the data center operator, their ability to deliver on time, the flexibility they provide from an overall portfolio standpoint. So those are really interesting trends, and it's one that we're seeing the hyperscale companies displaying that dual strategy is something we're certainly seeing today. Another interesting trend that's taken place has been the extremely aggressive pricing that different markets have seen related to different sized opportunities. So as you can imagine, as these opportunities for data center operators get bigger, the pricing traditionally gets more aggressive. And we're seeing that both in retail and the wholesale colocation market. And I will say, just for any, if you're in the investor world and you're listening to that comment, I think what you need to remember is, this is a different product today that's being built than was being built, 2 to 3 years ago. So it is not just the competition that's driving the pricing down. The pricing is of something that is different than it was 2 to 3 years ago. But it's certainly in certain markets, it's very aggressive today. And then the last trend that we're seeing, and we've seen this for a while now, is the data center operators are maturing their services to try and meet the needs of users. And I certainly wouldn't describe it as trying to be all things to all people, but I think what users are expecting, enterprise users, smaller companies that have different requirements today and could down the road, they're expecting more out of the data center operator. So those companies have really worked hard to deliver services that make a difference today. And so you can see that specifically related to things like connectivity, both from like a fiber network standpoint, but also from an ecosystem side of things. We've seen a number of companies really work to build, cloud exchanges throughout their portfolio of data centers in the U.S. and globally. And that I just bring that up because I think that's an example of companies that are really working to make sure that they've got services that are actively helping users in the market today. So, again, those are some of the trends that we're seeing right now. I think that's a very good, solid view of what's happening here in the U.S. and in North America. And it's been a very interesting first couple quarters of the year. I said this at the end of the first quarter. I thought the second quarter would be stronger. And I do think we'll see continued growth into the rest of the year, an increase in growth. I don't believe that 2019 will be as strong as 2018, but it will be, not too far behind. So anyway, those are the things that are taking place, the trends that are taking place in the data center industry at the halfway point of the year. And so what I want to do now is just go market by market, 11 markets that I picked to walk through and talk about, one phrase with each market, and then I'll explain why I believe that that is happening today. And by the way, if you follow our content, you follow what we're doing, just so you know, at the end of the third quarter of 2019, we'll be adding an additional 5 markets to our Insight tool, which is what we use from a quarter by quarter market sizing perspective and really trend standpoint. So we'll open up the European arm to our tool, which will include London, Frankfurt, Amsterdam, Paris, and Dublin. So if you are looking to understand more about markets in Europe, that's really where a lot of growth is taking place right now. But that is coming at the end of 3Q 2019. So stay tuned to that, Rhett, and all people listening. Hi, Mom. I'm kidding. I'm actually not kidding. She does listen to this. Okay, we're starting with Atlanta, and my thought around Atlanta is it's poised for growth. And the colocation supply currently in Atlanta is going through a maturity process, and Atlanta traditionally, actually we did a podcast on Atlanta with Flexential's Tim Langen. I don't know, maybe 3 months ago or so, in this very location. You can check it out in the show notes. I've been told to say that by Rhett and Amber to make sure that if you would like more info on Atlanta, you can get that. But basically, Atlanta traditionally has been a retail market from a size perspective. Transactional sizes from a couple cabinets to 500 kW. But that's probably been more of a mindset with the supply that's been there, and that's no offense to the providers that have been there. There've just been some, I don't think there's been the amount of providers there really to drive that competition, and that's changing in Atlanta. So, right now, Switch is under construction with a very big facility there. This will be their really southeast location and focus point for the foreseeable future. T5, who's been in that market for a long time, they just bought additional land there. Stack is in that market. Flexential just added capacity. QTS is there and has been there for a long time. So if I didn't mention provider, we recognize you're there too. But I think this is a really good example of just watch this market over the next year or so, and we'll see if the deal sizes get bigger. I think they will. We at Data Center Hawk think they will. Okay, Chicago, tax relief has arrived. So the big news out of Chicago over the last, probably 2 or 3 months has been this legislation that was signed into law. I think over the last 30 days. And, I say this a lot, the easiest way to change the way that data center opportunities can come to a market is to change the taxes. It takes a lot of work, a lot of time for power costs to change. It takes time to, build additional facilities in a market to bring a competitive environment where users can really leverage their opportunity and get the best deal. It takes a lot of time to do that. But you can change taxes, with the stroke of a pen, and that's what the lawmakers in Illinois did. So it benefits the state. Chicago is obviously the largest data center market within that state. And, in order to get big companies to look that way, it's, something that I think will be successful. So basically at a high level, it's $250 million investment, 20 jobs over a 5-year period to qualify. But once you get to that point, there's some pretty, sizable incentives that a company can get for making that investment in Chicago and in the greater Illinois area. So watch out for that. In fact, I was talking to several people in that market who were saying, even right after that legislation passed, that they were already having conversations about, different opportunities based on that new tax relief. So, Chicago, that'll be really interesting to see how that plays out over the next several years. Now we're moving on to Dallas, and my takeaway for Dallas is that it was a strong absorption quarter. Dallas kind of ebbs and flows with how much absorption takes place here related to mostly enterprise demand. There have been some cloud demand. There has been cloud demand that's been here, but it's been on the smaller side of things. But this was a stronger absorption period for Dallas, which is a good thing. Dallas is a very competitive co-location market. There are, just very qualified data center operators here with great facilities. And so we've got, there's a pretty sizable amount of capacity on the market right now, but, it was a stronger absorption period, which is good news for Dallas. We estimate that there's been about 15 megawatts of absorption that's taken place in the first half of 2019 for Dallas. I think the main question the Dallas market needs to answer is, can large demand really come here on a consistent basis? There is some, obviously Facebook has a massive campus in Fort Worth in the Alliance area. Google just broke ground in Midlothian, which is to the south part of the city of Dallas. It's not in South Dallas, but it's on the southern, kind of border of the market. And so, just seeing what type of bigger demand would actually enter the multi-tenant Dallas data center market will be the key for the rest of 2019. So watch for that. But a very strong absorption, a lot of strong absorption for Dallas. Los Angeles, I would say strategic location drives opportunities. Obviously LA is not the most inexpensive market to be in from a power perspective. It's not the most inexpensive from a real estate standpoint, but it is highly strategic. And given the amount of companies that are on the West Coast, given the connectivity that's there, there's some, it is definitely a strategic location. And so it drives both small and large opportunities. I think the most interesting thing to me over the last probably 2 years there, and I think over the next 2 to 3 years are the larger requirements that are analyzing that market as a potential home. And so I think it just goes to show you that this is not a market that will be doing the type of activity that somewhere like Northern Virginia is completing today. But from a strategic standpoint, if you have to be there, companies will figure out a way to pay the money to be there and figure out where to go. So again, LA, strategic location, connectivity is a big part of that market. So then I would go from the West Coast all the way to the East Coast to New York, and I would say the same thing. Strategic location drives opportunities, part two, because you see a lot of very different markets, but very similar in some of their high-level reasons companies want to be there. I mean, New York, the financial market obviously is strong there when you think about Manhattan. And so there's, traditionally retail-type opportunities that, 50 kW, 100 to 500 kW requirements that will actually go in like downtown Manhattan. As you get bigger, those have traditionally either gone to the outskirts of New York or into the northern New Jersey market where there's a power cost difference and, there's some more options from a larger perspective. And there have been purpose-built opportunities in the northern New Jersey market that caters to that, which I'll talk about in a minute. But, New York is really interesting from, an edge side of things. And I think we certainly think that given some of the technology that is being developed today related to different things we've had on our podcast before, one that comes to mind, you can see it in the show notes, is with CyrusOne's Jonathan Schildkraut. We had a really good discussion on AI and autonomous driving and how that will impact the data center market. And that's, an area that as growth continues, New York would be an area that would benefit from that given the high density of population. So, again, New York, the strategic location really there is driving opportunities. Northern New Jersey. So here my slogan is enterprise demand pickup, which happened in 2Q. So if you know anything about Northern New Jersey, I mean, this was a market that grew significantly from 2010 to 2011, kind of in that range. That's off the top of my head, but I think I'm close to being right. And if you want more info about that, you can get on our Hawk Insight tool, because that's I know that's where we've got that information. But that market really grew as companies were coming out of the mindset that we needed to own and operate our own data center facilities. So they began to trust data center operators with those locations, and really, and this was really enterprise demand that found this market to be attractive. So you've got some really top-notch facilities that were built there back in the, I'd say 2008 to 2012 range. And so there's been somewhat of a lull in demand in that market over the last several years. But, this last quarter and since the beginning of the year, there's been some companies that have been really interested in that market and actually have taken down capacity there. So, I think that's a market that's interesting to watch. It serves the financial sector really well, but again, that's the enterprise demand pickup, Northern New Jersey, first half of the year. Northern California supply is on its way, and so in my opinion, there's a lot to like about the Northern California data center market right now, and I think that 2019 will continue to be a solid time period for that data center area. I mean, one reason specifically is because the real estate market's so tight, not just in the data center standpoint, but just a general real estate market. So obviously what that creates is a harder scenario for new supply to come online. I certainly don't want to suggest that there are not data center operators that are in the process of doing that, but you've got that market, you've got environmental challenges you have to meet, you have permitting challenges you have to meet. Heck, just building something and parking the people that are working on the site is a challenge. And you're a data center operator that's developed capacity in Northern California, you know what I'm talking about. But what I like about this area right now, number one is, there's not a lot of speculative supply on the market. And so what is out there is, consistently being absorbed. This is by larger companies that traditionally are in that market. You are not going to run a, search across the U.S. 1 out of 25 is going to be compared. 1 out of 25 searches will, end up where Northern California is the winner. And that is because it's just a more expensive market. And strategically, companies that are there have to be there for a reason. So they'll pay the amount that they're going to pay because they want to be there. But I like the groups that are there, the way they're building. You've seen more vertical builds over the last, several years there. So now we're seeing actually 3-4 story data center facilities. Creates a smaller footprint from a square footage perspective, but they figured out a way to increase the densities. So, there's big growth happening here on a continual basis. So watch for that, throughout the rest of the year. Okay, so I want to go west to east again, and now I want to talk about Northern Virginia, where the big are getting bigger. This is this is the largest data center market in the U.S., really in the world. It is the most competitive, both for small and large opportunities. The first quarter was relatively quiet. So, 2018 in Northern Virginia, we had just a massive growth year. I mean, it was just, massive. There were a number of pre-leases that took place that were bigger than we'd ever seen in the industry. So just, really exciting. And so you saw a lot of investment in this market. Data center operators that weren't there were scrambling to get there. And so we had a quiet first quarter, which again, like I said, is pretty consistent with the way growth takes place in our industry. But the second quarter was a lot stronger, not just from bigger deals that take place, but also from, enterprise demand in that market. So certainly encouraged with the growth that took place in Northern Virginia in the second quarter. The absorption that takes place there is anywhere from a third to half of typically the U.S. Absorption number. And I think we'll see that play out in the second quarter as well. But, definitely a respectable quarter for that market from both the supply and absorption perspective. And it is just fascinating to watch the growth that's taking place in Northern Virginia. Phoenix, the Southwest U.S. cloud. That is what is taking place right now. So it's no secret in this quarter there were a number of large companies that announced that they had, bought land in the northern or in the Phoenix area. Microsoft continued to grow in Goodyear, which is on the west side of the Phoenix market, and Google took down a pretty large parcel in on the east side of the market in Mesa. And so you have a lot of growth taking place in both of those places from a data center development standpoint. There's a number of operators that are in each one poised for growth, ready to go. But it's very clear that these companies have found this market, the larger hyperscale companies have found this market to be a really good, solid home for, their cloud nodes in the Southwest. So, watch for that growth to take place. And typically what will happen is, these companies it goes back to that trend that we talked about at the beginning of the podcast where, the companies are actually, leasing infrastructure from data center operators as well as building, owning, and operating it themselves. And so we're definitely seeing that in Phoenix, and there's large supply targeting these markets. So I think you will see Phoenix grow significantly over the next 12 to 18 months, and there's a lot of maturity taking place in that market from a supply standpoint. And so some of the providers that have been there for a while, in my opinion, that have been very successful, I think will continue to. And then, some of those that haven't been, that are there for the first time, it's going to be a really competitive, I think 12 to 18 months. So watch out for that. Again, Southwest U.S. Cloud is in Phoenix. watch for that to continue. Move up the West Coast to Portland or the Hillsborough area, which I'm calling the up-and-coming market of 2019. So I bet literally for the last 3 years, we've heard about the interest in Portland or Hillsborough and how this market is attractive and why it's attractive, but there hasn't been a lot of activity there, and that is changing. Not just from people or companies that are looking in that market, but also from data center operator development that's taking place there. There's been a number of companies that have had sites, and we're now starting to see companies build there. So I think that's very interesting and very, exciting. There's some subsea cables that go into that market, so it's more than just a reasonable power cost. Decent tax incentives. There's some connectivity advantages from a international perspective that area promotes that others don't. So, I just think that's a really exciting market and will be, for the long haul. It kind of reminds me of, and that's deals that are both, regional to that area, but also, companies that are looking West Coast that are trying to find a inexpensive, reasonable place to locate their infrastructure. And there's some other markets that are like that, we've seen over the last several years. When the supply gets there, you see data center users much more willing to take deployments to that market. So watch out for Portland, Hillsborough in 2019. Okay, so that's 10 markets. The 11th market. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, 11. Counted that twice now. Is the 11th market is Montreal. So we just talked about kind of the Southwest U.S. cloud being in Portland, and so I want to highlight that where Canada cloud growth is taking place is Montreal, and this is the market for Canada's big cloud demand. At least it's been for the past 12 to 24 months, and there's a number of really interesting things taking place in Montreal right now. And, I'd say one of them that we saw at the end of 2018 was the acquisition activity that took place. ColoD acquired, Cologix acquired ColoD and really began to focus and is focusing more heavily on large cloud options that can attract some of these larger requirements. Vantage, who is a data center operator out of Silicon Valley, acquired a company called 4 Degrees and is continuing to expand at their campus there in Montreal. And so, we think that there'll be continued M&A activity in the rest of 2019 in that market. So it wouldn't surprise me if there's another operator or two that get acquired there. And then also too, there's just been a number of users in that market that have taken some pretty large footprints. And I guess when we think about how they grow, they traditionally grow within the market that they're already located in. So they'll go to different markets and plant the flag for the first time in those areas. But, one of the growth, I think in certain scenarios, it's easier for those companies to just expand where they are than to go find a new market to go to. So again, in Montreal, it's really where Canada's cloud is growing. And there's still significant activity taking place in Toronto, but there's a pretty large power cost difference between the two markets. And so that's, there's certainly been, growth, the larger growth going to the more inexpensive market over the last, several years. So look for that to continue. But a really exciting halfway point for U.S. and I'd say North American data center market growth. Again, Atlanta poised for growth. Chicago, the tax relief story was really big. Dallas had a decent absorption quarter. Both L.A. and New York, really it's the strategic location that's driving opportunities to those markets. We've seen enterprise demand pick up in northern New Jersey. Supply is coming to Northern California, which is a good thing because the demand is definitely there. Northern Virginia, the biggest markets getting bigger. Had a strong second quarter. Phoenix is really growing into the U.S. area in the Southwest where cloud is taking place. Portland and Hillsboro is really an up-and-coming market that will, we think, have a really strong rest of the 2019 period. Montreal is where Canada's cloud is growing. And so those are some of the really exciting things we've seen in the first half of the year. I think we all are pretty excited about, the rest of the year to see how 2019 plays out. There's a number of things in the U.S. and North America that's taking place. There's some really exciting things taking place in Europe and Asia Pac as well from a growth standpoint. And we think that, the rest of 2019, 2020 in those areas will be, really strong. So watch for that as well. Again, this is podcast 11. So, if you are interested in our other podcasts, which is mainly me chatting about my ideas in the space, as well as being 40 years old and, stuff like that. Check it out. We're, and we can put up information about different podcasts that we have, but sometimes we focus on a market. So we just did one on Seattle. I think that was podcast number 9. Podcast number 10 was on carrier hotels. So in fact, I was talking to some folks in New York today that operate one of the carrier hotels there. And we were just talking through how those versions of those asset classes in real estate are just becoming more and more valuable as companies are valuing connectivity and ecosystems of different networks and peering points from an internet traffic perspective. So anyway, if you're interested in carrier hotels, we just did a podcast on that, which was interesting. And then we have our Hawk Talks, which are sit downs with industry executives, and we have some really fascinating ones we've done in the last several months, and have some really exciting ones coming up. So hey, thanks for listening wherever you are. If this was of interest to you, if you found value in it, would you comment? We'd love your feedback. We'd love ways to know how we can better make this content valuable to the people that are listening. I'm certainly encouraged by all the feedback that we get from people that are plugged in, and then if you think it benefits someone, share it. Share it on LinkedIn, share it on Twitter, podcast, or Instagram, wherever you found this piece of content that would be helpful to us. So, from all of us at Data Center Hawk to all of you, thanks for watching, and we'll catch you on the next one.